and welcome to Storyvan TV. I'm Bonnie Dixon, and I am welcoming today Nate Hallums. And what I love about Nate is when I first saw his name, it's Backyard Fishing Agency, and I'm thinking, oh my goodness, what's that? Had to get to know him. And as I got to know what he does, he is focused and helping businesses with the ERTC. Oh, what's that? That's the Employee Retention Tax Credit. And why would you want to know about this? Well, we're going to dig deep a little bit with Nate and find out what it is and why you must know about it. And you must tell your friends who open your businesses about it as well. So, Nate, welcome to Storyvan TV.
Thank you so much. Good to see you again, Bonnie.
Good to see you again. Can you tell us what ERTC is and maybe how it came about?
Yeah. So, when COVID hit, everything shut down and the government was trying to figure out whatever way they could to keep it going. And so, they sent money to households. They made programs available to small businesses. And this is one of those programs. So the CARES Act is the name of the legislation that created it. It also was the same legislation that created the PPP loans. So a lot of people got those loans, and they're more familiar with that because it was basically a one-sheet application, and you basically, you could get in. There was a lot of abuse with that, so they're trying to clean that up now. But at the same time, if you got the loan, when they announced the program, if you got the loan, you couldn't get the credit. And so a lot of tax professionals and financial professionals looked at that and said, okay, I guess we don't qualify, and then just put it out of their minds. And so their clients never heard about it. They said, we'll do the loan. It's an easy thing to do. And so away we went, and all the money that went out with the PPP loans got absorbed and put to work and kept people in business and at work. Because it was designed to pay payroll and to pay utilities and to pay rent and keep the heroes of America, working and keep the doors open, so you and I would have places to go after the pandemic as well as during. So that was the origin, and fast forward, here we are today, talking about primarily ERTC because the PPP loans are gone, and small businesses still need help.
They do. And sometimes as small businesses, they're wearing many hats.
Right.
And trying to understand every little detail of so many things out there can be overwhelming. And you hear it maybe mouth to mouth instead of an expert like yourself who really know their stuff on who can get this ERTC, why they want to apply, even if they think they can't get it. So they're for sure. It's not going to cost them out of pocket. And so it's a little bit different. You were sharing with me earlier, and I find this fascinating, where the monies come from and where they go and how it all works. Can you explain that again for everyone?
Yeah. Well, it came from a conversation that I was having with some people about government money and their aversion to government money. And yet they took the PPP loan. So let's just contrast the two. So the PPP loan was money that was at the government, printed by the government, and sent to the small business. And then that small business spent it the way they were supposed to spend it. And then they sent a report back in and said, I qualify for forgiveness because I spent it the way you instructed me to spend it or allowed me to spend it. And so I don't fault that, but some people do. Now the ERTC is different money. The ERTC used to be in the bank account of the business owner or the church or the nonprofit. And so that money, when they paid payroll, was sent in as a payroll tax. So that the money that is sitting there now that we're trying to reclaim for them is just that. It's a reclamation of dollars that you've sent in, and this money is earmarked for you. It has your name on it. And so all we're doing, I say all we're doing, but it's a relatively complex process, but simply, we are reclaiming money that you sent in and putting it back in your hands. Now, hopefully, you're a better steward than the government, whether it relates to your business or it's your programs at your nonprofit, or your ability to move that money around the community as a church. So, there's a different source of those funds when it comes to the tax credits that you're reclaiming.
Are there like any requirements what a business has to do with the money?
No, no. You could go out and buy a motorhome and travel around the country like the Dixons do. Now it would become taxable money at that point because you didn't put something, unless you could make the motorhome your business. But most people are basically taking it. I mean, right now, if you think about it, there are increased costs, increased rents, increased salaries. So there's plenty of stuff to do with the money to absorb that refund that you're getting. And again, the whole idea is to keep the doors open so you and I have a place to go eat, a place to go shop, a place to buy our car, whatever it might be.
Mm-hmm. Wow. How many are the requirement for how many employees? Like 0 to how many?
Yeah. Well, we serve down to 5 employees, and we probably aren't making any money at that level, but we wanted to get as small as we could. But I would encourage people who have 1 employee, 2, 3, 4 employees to go out and get this money. You can get up to $26,000 per employee. I mean, you have to be absolutely, perfect submission, meet all the requirements to get the 26,000. We've seen more of an average of maybe 10 to 12,000 per employee, but still, I mean, 20 grand is 20 grand back in my pocket. If I only have 2 employees, that probably means a lot to me. So that's, the rule is you can't go above 500 full-time employees.
Okay.
And the other piece, which is a little bit of a nuance, is it can't be, I mean, you could be your own employee, right, as an owner. And so the government wanted to reward you for employing people that aren't in your family. And so there are some practitioners who are allowing family members, I guess, depending on what level, to be part of the calculation. Ours, we want it to be black and white. We want it to be that we know that we know that we know that this number is good. There's nothing gray about it. We're not going to set you up for an audit. We're not going to trigger an audit because you included your daughter. So we do non-family employees. We have CPA licenses on the line, and we will stand up with you in your audit if need be, and defend our package that we submitted for the justification for your rebate. So in our case, it's down to 5 employees, up to the 500 full-time. It can be unlimited part-time. So we have processed a restaurant, 2,200 employees. Well, 200 of them were full-time, and then 2,000 of them were part-time, and which is typical of a restaurant or hotel or whatever. And so they are getting back over $1.5 million. So yeah, big time. Now it's a big operation, so they spread that around, and it's probably similar to the small person who has 2 employees who's getting back 20 grand. So
Right. What if a business didn't lose money?
Yeah, that's a good question. And a lot of people disqualify themselves. I can't tell you how many people I've talked to. My favorite pizza guy up the street, I had to have a couple of, half dozen conversations with him because his whole thing was, hey, we had record profits. And that's good. I'm glad to hear it, and I'm glad you did well. But the first criteria, the easiest kind of binary, did you or did you not get impacted by the government? Did the government tell you to do your business differently in any way? Did they say you can only have 50% capacity? You have to serve curbside. You have to have takeout. We're just shutting you down. We're telling everybody in your business to shut down. So there was some period of that for everybody for the most part. And then definitely churches, any places that had big gatherings. So theaters, concert halls, gyms, all those places, they were shut down because of the amount of people that would be coming through the door. So if that happened, it doesn't matter what happened to you financially, you qualify. The second way, so these are 2 common ways. We have a third way that's very uncommon. And so the second way is, were you impacted financially? So did you have a specific drop in revenue? And there's a threshold that you have to meet. Now, this is all done quarter by quarter. So first quarter of 19, so 2019 is your base year. And then you compare the first quarter of 2020, first quarter of 2021, both back to that first quarter of 2019, and then on down as you go through the quarters in the year. So did you drop in revenue? And it's a different number for 2020 than it is for 2021. And then that calculation yields, and maybe it's both. Maybe you had 2 quarters that you qualified with revenue, and you had 2 quarters that you qualified with the shutdown. So those all are taken into account, and our CPAs go through those calculations. Now, we have 3 large CPA firms doing our work. They all have to agree at the end. And we can't have one saying, Bonnie, you got 102,000. The other guy's saying you got 182,000. So they all have to agree. If they don't agree, they go back to the drawing board and they figure it out. And they are justified. Everybody's comfortable with everything that's represented. And then we know you're going to get back whatever it is that we say you're going to. Now, the third item or category for qualification is supply chain impact. So there's probably some law firms out there that are doing this, or tax law firms that are doing this that you don't really know about. But we're the only large submission processor that I know of that is offering this as part of the solution, and that's a supply chain impact. So take a car dealership as an example. Now, anybody who's bought a car in the last 2 or 3 years knows that they paid 50% more than they would have in 2019, just because of the shortage of inventory. But they made gangbuster profits. Nobody had to shut their doors. And so those other two things didn't really apply to them, but they couldn't get the inventory. So COVID did impact their business, and that's the whole purpose of the money. So because they couldn't get their inventory, because the manufacturer couldn't get parts for the ultimate end product that they were making, those qualify them. And so we require a legal opinion, which we help you get. But we require a third party, arm's length legal opinion. Doesn't cost you any more, but we want to have that. Our accountants want to have that, so they can rely on that, and then do the processing from there and do all the work from there. So,
wow, it seems pretty incredible. And so why isn't everyone doing this? And why can't my own accountant or bookkeeper do it for me?
Yeah, those are great questions. It's people don't know. I mean, that's just, a lot of it's people just don't know about it. And most accountants kind of wrote it off when it came out with the PPP loans, and they couldn't qualify. So now that they can, it's a little bit of an education process that we're going through. That's probably most of the time that I spend is in educating people. And then when you think about it from the CPA standpoint, it's going to go away in 2 or 3 years. So why would I spec up on something that's going to be, a root canal experience for me as a CPA? It's like doing an audit or something. Why do I want to do that when I can't do that same service after 2 or 3 years? So they would prefer to hand it off to a third-party firm, add value to their clients still, get the money for their clients still. And so we actually have CPAs that are engaging us as this kind of added value, third party who specializes. I mean, just like they would hand off something maybe to a tax attorney, then they're handing that process off to us because they don't want to necessarily pursue it, get educated on it, take up staff time. They're busy enough as they are. And here's the third piece, which is a pretty important one. People are subject to audits. I mean, there's a bunch of people being hired at the IRS now. And what you don't want to do is risk your license on something you don't know how to do, or maybe you've got 30, 50 clients. Is it worth you to do in that universe to take this on when you could actually have people who've already said they'll stand up for an audit and they've got the expertise and they're very confident, and three of them agree, why would I take that on as a sole practitioner and have a risk that I created, I trigger an audit for my client, and now we're both in trouble. So
that makes sense. I've heard a saying from a dear friend who's a professional organizer. He says, do what you do best and hire out the rest.
right.
And in this case, they're a professional, but the niche of this particular project, this particular monies would be better served for someone like yourself that really knows it, the ins and outs, and been doing it, been getting clients money. And so I guess the question is, why should people use your firm?
Yeah. Well, I've talked about a lot of it, but basically, we probably have the most robust platform and team in the country. Obviously, I'm biased in saying that, but we've taken a lot of care. We've been on the other side of the desk for a lot of different services, including accounting. And so we wanted to make sure that it was a great experience for our clients, that the burden, as much as we could, is lifted off of them, that we handle all of the heavy lifting. And I don't know of any other firm that has multiple accountants double checking their work. So you have licensed people. So here's the other deal. A lot of the calculations that are being done now and submissions that are being made by offshore accountants. So it may be perfectly fine. It may work out, where there's not a problem, but we'd rather not take that chance in terms of referring people in, particularly if we just met you, and we want to make sure that we're not only giving you a good experience, but we're giving you the right information, and we've got licensed people in the U.S. who understand U.S. laws and individually, per state, to be able to be on your team and be on your team when it counts if there's a problem. So we've tried to eliminate all the problems and, on the front end by creating such, as I mentioned earlier, so there are some firms that'll say, well, if it's your daughter, we can include her, or if it's your cousin. So we take no family. So, I don't know where it cuts off, a third cousin or whatever, but we take no immediate family for sure as a countable W-2 employee. Mm-hmm. So we don't want to create any gray area for you. Mm-hmm. And obviously we don't want to create any gray area. Our accountants won't create any gray area for them. So that's one element. So kind of quality and I guess, so here's a number for you. We've done 7,000, almost 8,000 submissions, no audits, over $800 million coming back to our clients. And we haven't had any issues there. We haven't had, some people say, well, what if I don't get the money? Well, if we've charged you anything, you're going to get your fee back. But generally speaking, you're not going to have an issue. We have a big universe to say we haven't had any issues. So there are a couple of other features of our service that would be an advantage maybe to some people as well. One is we can provide you the money within 2 to 4 weeks. The IRS is only paying the money out in 8 to 12 months, depending on where you are on the pile. The reason we're able to do that is we have a financial partner. Now you have to have a $200,000 or higher rebate coming to you. But if you do, then you now have the option of getting that money right away and putting it to work right away. So that is one differential. And then this other piece of the supply chain piece, and again, we're looking at all three as ways to add to the bottom line that we're going to be able to say, here's how your credit goes. And those are all reasons why you also don't want to disqualify yourself. I've tried to play CPA a number of times in having, well, you probably don't qualify. Let's just submit and see. In fact, a restaurant that got back $209,000, they were told by their payroll service they didn't qualify at all. So we went from zero to $209,000. And again, we're going to stand behind that number. So those are all reasons that we, above and beyond the customer service, which we think is, better than any out there. even though we're only asking you to do a little bit, sometimes it's frustrating to, deal with numbers at all. So,
Sweet. That is a wonderful story. People say, oh, they make a decision before they hear and see all the facts.
right.
And it sounds like your company is very, very thorough. And I have a couple things I want to ask you here
Sure.
as a background. Backyard fishing agency. Tell me the story behind that. And
Yeah.
then I'm going to share with people how to get a hold of you.
Yeah. Well, I appreciate that. That's my core business. I mean, this is a project that I've got going that I really want to help. I mean, my focus has been on nonprofits and churches, and even though probably 3/4 of my submissions have been regular businesses, just because they're the ones who are responding. But if I'm calling somebody, I'm trying to call, people that aren't getting as much help. They're not really out in the business world that much, and they were impacted. I support several nonprofits on a regular basis, so to be able to have them, instead of us, doing a bake sale, let's go get you $50 or $60 or $100,000. That's a great, exciting conversation for them to make plans about what they're going to do with that is pretty exciting. And then for the commercial places that I've helped, hand a 6-figure check to, they've all said, well, what else do you do? So backyard fishing. So I try to do little things in my life to keep my family members alive, prior generations. And so this comes from my grandfather. And we used to, I would spend a lot of summers with him. And he traveled a lot, so I don't know how he squeezed in the time, but he did. And so we would go to a river that was a couple blocks away. And I would bug him, and there was a lake I wanted to go to, and it was, 20, 30 miles away. And we'd gone there once, and I wanted to go back. And I'm, 8 or whatever it is. And he said, don't try to go fishing someplace else until you've caught all the fish in your own backyard. And I thought, I help local businesses get local clients. For the most part, there's some national people, but for the most part, it's local businesses getting local clients, getting to the top of the pile in terms of being top of mind in their clientele and or in their community. And so it just seemed to fit. Makes me think of my grandfather every time I say it.
It makes me smile.
Yeah.
Now, Nate, if someone would like to get a hold of you, what would be the best way to get a hold of you?
Well, probably the easiest way is to reach out to me on LinkedIn. I mean, that's a great way to do it. And all my information is there, my email, my website, all that stuff. So LinkedIn's kind of a central place for everything. Okay. And then my phone number, you've got my phone number there, so that works well. So I'm glad to talk with anyone about what we do. And I don't know if we have time to talk about the services that we have with backyard fishing. How are we doing on time?
We have 4 minutes.
Oh, okay. I'll make it fast. So my essential duty as your marketer, your digital marketer, is to help you create and manage, optimize your digital real estate. And so that can be social media, that can be your reputation, that can be your website, that can be getting you to be the number one plumber in the area. And so when people are looking for a plumber, in my case in Cincinnati, then you're the first one that they find. And then when they find you, they see that you have a great reputation. If you don't, then we help you build one. And if you have one, we help you market that. So we post to up to 8 different social platforms on a daily basis and up to two times a day. We create interaction bots, essentially, that interact with people to try to turn that social media into a lead generator or a prospect generator. But my whole job is really to get your phone to ring and get it to ring with people that you want calling you. So people that are ready to take action, people that are your ideal customer. And so we winnow all those people out that aren't your ideal customer and get the right ones to pick up the phone or hit your website or send in the request for service off of your website. So we make your website more than just a brochure. It's an active piece of equipment that's going to work for you. And we just try to tie it all together.
Wow, that is very wonderful for solopreneurs who have a lot on their plate, for small to mid-sized businesses. I am sure they will would be worthwhile to talk to you. You're going to help them save their money, possibly on the employee tax credit, retention tax credit, and get seen and heard and make more money. So double dip here.
Yeah, absolutely. Yeah.
Thank you, Nate, for coming to Story Van TV today.